Good afternoon, traders and investors. Will back here with another one, and it's that time of the week again, guys, where we cover the top 5 options plays for the upcoming week. Hope everybody has had a very beautiful weekend so far. Now, before we get into the video, guys, I wanted to touch upon something that is on everybody's minds right now, and that is obviously the events that transpired yesterday at Donald Trump's rally in Pennsylvania when there was an assassination attempt made on the former president's life. Now, obviously, you know me by now, guys. I very rarely talk about any political events whatsoever because we try to keep everything very, very neutral on the channel unless they directly affect the markets. The purpose of the channel is obviously finance oriented only and not so much politics, which is why I don't really delve into politics either in North America or across the world, as I said, unless they severely impact the markets. However, what happened yesterday, guys, transcends all of that. It is over and above everything else, right? So just a few quick words on the matter, in my humble opinion. Obviously, guys, the events that happened yesterday was a complete tragedy and a disaster, in my humble opinion, right? Yes, Donald Trump was safe and in the end of all the events. However, let's not forget, guys, that one person did lose their life at yesterday's rally. And also there are several people in the hospital in critical condition right now. So my heart goes out to each and every person that was either directly or indirectly affected by these events. And I obviously hope that nothing like this ever happens again. We have to condemn any sort of political violence, guys, in any form of democracy across the world, not just in the United States, but anywhere, right? This is just completely unacceptable. And as I said, I hope that this never, ever happens again. And obviously, I'm very happy that former President Trump made it out with pretty much unscathed from the event. However, let us not forget that other people, unfortunately, did not have the same fate. So as a Canadian, to my US people that are watching right now in the audience, as a Canadian, I consider you all to be my brothers and sisters, and my heart and my thoughts and my prayers go out to everybody once again who is either directly or indirectly affected by the events. Yesterday, I filmed a video prior to the events that happened, and I scheduled the video to be released at 8 p.m. Eastern Standard Time, and then I went out to have dinner with my girlfriend. When I actually checked my phone around 9:30, 10 p.m. to see whether or not the video had been successfully uploaded and if there were any comments, I saw that it was not uploaded. Unfortunately, I had set the date for tonight at 8 p.m., so that was a mistake on my part, which is why, guys, I did not know that the events happened before checking my phone at the dinner table pretty much. And then I pretty much set the video to public at that point in time. And unfortunately, well, I wasn't able to address the issue in yesterday's video because of those reasons. If not, you guys know me, I'm very transparent and very honest. I definitely would have addressed them yesterday. However, as I said, the video was filmed before and scheduled for after the events. Unbeknownst to me, I was unfortunately at dinner at the time. So as a final note, guys, once again, my heart, my thoughts, and my prayers go out to everybody, and we need to condemn political violence, whether you're on the left or the right. It does not matter. That is just not the proper way to do things. We have to go out and vote for the result that we potentially want. We cannot be resorting to things like this. Obviously, I would never say that any of you listening right now would do such things, but just, we have to have that common sense within us, right? So those are my thoughts on the matter right there. So hopefully you guys understand. And once again, my apologies in yesterday's video for not addressing the topic any sooner. So moving on, guys, let's take a quick look at what we're going to cover in today's video. Number one, we're going to go over some of the few strategy rules. We're going to do these a little bit quickly because I want to cut down on the time of the videos. And then we're going to take a look at last week's top 5 options plays. And then of course, take a look at this week's top 5 options plays. And I do have a couple bonus plays and earnings plays that could be quite risky, but for all of you that are willing to play earnings, obviously a lot of risk involved in playing earnings, but for those of you that want to play, I will be sharing the strategy that I will be using to play those similar earnings. So let's get right into today's video, guys. Let's take a look at what we have on deck for the week this week, right? In terms of macro events, not too much, only retail sales on the Tuesday session. The story of this week will definitely be one all about earnings. Take a look at all of the massive earnings events that we have over the forthcoming week. We have a lot of banks reporting on Monday and Tuesday. Then on Wednesday, we have a few semiconductor players with Thursday, ASML and TSMC. Those are going to be huge. Netflix starting off your big tech earnings on Thursday, and so much more all in between, right? Domino's Pizza, a few of the home builders, DR Horton, Abbott Labs, Ally Financial, Johnson & Johnson, so many large names, American Express, which will be reporting throughout the week. So those will be the ones that will move the markets, in my humble opinion, more than anything else. Now, as of yesterday's events and how they're impacting the markets right now, The futures are right up here. They are now positive green, opening up into tomorrow morning. We will see if that lasts, but definitely yesterday's events can bring in a little bit of volatility on the week, guys. And I would be lying if I could tell you which way it's going to be. There may be some heightened volatility leading into tomorrow and Tuesday. Obviously, we know we have the Republican National Convention that's going on, in which they're going to nominate Donald Trump as their official candidate for racing on the Republican Party. So all those things can have an impact on the market, but I'm telling you guys, I would be lying if I could tell you, if I could predict the direction that volatility, because of those political events, could send us in. So this week, maybe just be a little bit cautious here leading into the early part of the week with our strike selection. Now, moving on, guys, let's take a look at some of the strategy rules, and I'll be going over these quickly, guys. First and foremost, I made a 30-minute video on the in-depth strategy rules that I'm about to show right now. If you haven't seen that video, guys, I'll link it top right corner in the video right now, and also down below in the description. I go over all of the strategy rules very much in detail and show you guys how I pick my stocks and how I pick my strikes as well. Keep in mind, all of these options in today's video, guys, are going to be short options, more specifically short puts. If you don't know what a short put is, guys, it's very, very simple. This strategy is extremely easy to run, whether you're a beginner, intermediate, or even advanced investor. A short put, guys, just think of a buy limit order that pays you. Let's say you want to buy McDonald's down here at 250 bucks. You want to buy 100 shares, right? Well, there's two ways of doing it. Either you can set a buy limit order right here at 250 and it just sits there, right? If it gets filled, perfect, you end up with the shares. But if the market just runs away, well, unfortunately, you don't get the shares, right? However, short puts are the same thing. They act as a buy limit order. However, they pay you for that buy limit order. Take a look at the short puts here on McDonald's. You can see that for the 250 strike for next Friday, they are paying almost $1.10. This is $110 in other words. So think of a short put order as being a buy limit order that pays you. You write a short put at 250, and in the process, you collect $110 in doing so. Now, if the stock finishes above 250 by the Friday session, well, you just keep all of the $110 in your pocket. However, if it ends below 250 on Friday, well, you're going to have to buy those 100 shares of McDonald's that you should be willing to buy anyways, and you still keep the $110 credit. So your average cost would be $250 minus the $110. And then if ever we get assigned, this is part of a larger strategy called the wheel that I run on the channel. And all you do once we be assigned is we write covered calls against the position on this side of the trade right here and generate even more premium. That's why we call it the wheel strategy. We get into a trade with short puts acting as a buy limit order, and then we get out of the trade with covered calls, which act as a sell limit order, right? So hopefully that makes sense to everybody. Now, in terms of the strategy rules that I look for here, guys, we're going to go through these extremely briefly. Take a screenshot because I'm really going to fly through these this time around. Number one, we need to be writing it on a solid company. Never, ever, ever write any short puts on a company you do not want to own at a strike price that you do not want to own, guys. It is rule number one for a reason. If you get assigned on a stock, if you have to buy shares of a stock that you don't have high conviction in, then managing the position will be a little bit nervous, or you're going to get a little bit nervous managing the position if you are at a loss. So it's rule number one for a reason. Please don't forget it. All of the following rules, guys, are going to add probabilities to our side of not being assigned the shares. Now, we want to be looking for companies that are in monthly uptrends or long-term ranges. All the plays I'm going to show respect one of these two criterias. Number three, no earnings this week, guys. Earnings are extremely volatile. You saw what happened to Salesforce, Nike, Starbucks. Earnings can go up or down 10-20% after the earnings. So if you want to be safe and respect this strategy and not get and end up with nasty surprises, don't choose to write puts on any stocks that have earnings this week. Number four, we want to be writing puts on stocks that are in a big area of support, or at least an area of breakout retest. If you guys don't know what a breakout retest is, look at this all-time high on the S&P 500 right here. So you can see we break out of the all-time high, retest it. This location right here is known as the retest, and then run a very high probability setup. So all the trades that I show will either be one of two things, either at a big area of support or a breakout retest trade. Number five, we want to be writing at or lower than the expected move here, guys. If you don't know what the expected move on a given stock is in a current week, just take a look here on optionsai.com. It's a free website that gives you the expected move. You can see here that I have Chipotle stock pulled up, and Wall Street gives you the expected move up or down for any given week. Here you can see the downside is about $56. So when I'm looking to write short puts, I always want to be writing at or lower than the expected move right here. It just adds to our probabilities that if we come down at the expected move, we get a little bit of mean reversion to the upside, and that presents a great opportunity to get out of the trade. Number four, or number 5 rather, we want to be writing on or red or flat day. Once again, this ties in to trying to get as close as possible to the expected move. Obviously, if the expected move is 3% from Monday to Friday, and on a Monday, we're already down 1.5%, 2% on Chipotle, let's say, well, then we'll be able to write puts below this expected move, and once again, be able to get a little bit of that mean reversion midway through the week. So I'll never chase the market, guys. I'm always going to be writing puts on a red or a flat day. Number 7, we're going to be wanting to write 0.5 to 0.75% in weekly premium. If you don't know what that means, guys, that is your expected ROI. So what does the 0.5% rule entail? Well, it's just looking at these strikes right here, right? So essentially what you want to be looking for is 0.5% on the premium that you're getting. All you have to do is very, very simple. Mental math rule is just divide the strike price by 2, and then you're going to be looking for the cent increments right here. So let's say these $250 puts would pay $1.25. You would just be doing $1.25 divided by 250, excuse me, and you'll see that is roughly 0.5% for the week. So quick rule, mental math, always just divide the strike by 2, and you're looking for that in your cent increments on the strike. The reason that I say that these are the defined levels for it, guys, is because they provide the best trade-off between risk and reward. You don't have a very high risk of being assigned, but you still get some decent premium, right? If we're always writing puts between 0.5 and 0.75% per year, we're going to make between 25 and 35% on an annualized basis. That is removing any compounding whatsoever, right? So our goal here is to outperform the indexes on a 2-to-1 basis, and this should get the job done while being pretty risk averse. Now, the last rule, we want to take profit at 90% of the contract value. That's just to ensure, guys, since this strategy is so easy, we just write puts on a Monday or Tuesday morning and then just let the time decay do the rest of the week. So we want to be sending a take profit order at 90% of the contract value. That way, if you write a put on a Monday, and by Tuesday afternoon or Wednesday morning, they're pretty much 90% profit. You want to take that profit and maybe use it to go shopping for another short put contract. So it just allows you to be taking profit if you're not directly at your computer because this strategy is so passive. Then lastly, guys, if we are assigned, we want to be writing covered calls against position. So if ever we have to buy, let's say those 100 shares of McDonald's, let's say, right, at $250 right there. Well, what happens when we get the shares? Well, then obviously, as I said, guys, we want to be writing covered calls against the position. And you can see right here, usually covered calls present some very juicy premium, especially when they're at the money. So the general rules for covered calls, guys, is extremely simple. They're basically the same thing, right? When you get assigned a position, just look for covered calls that respect the 0.5 to 1% in weekly premium, and you should be good. And then we're going to be writing at the assigned strike price or 1 strike higher. So once again, if we get assigned on McDonald's at $2.50 on the following Friday, then next week, the following Monday, we are going to be looking to write covered calls at $2.50. The only time that I'll choose to write covered calls above the strike is if, let's say, Monday morning, we get a pop over and above where we were assigned. Let's say we go up to $2.52, $2.53. Then I may just be choosing to write the 250s instead of my assigned strike price of $2.50, right? So hopefully all of that makes sense, guys. As I said, if you need more in-depth, detailed explanations, just feel free to click the link down below in the description for my full video on how to execute this strategy. Now, in terms of the expectations for the week, guys, before we get into the last week's top 5 plays, right? What are we looking for in terms of the SPY, right? So SPY, obviously, we know we're in a gorgeous daily uptrend right now. Maybe just looking for a daily higher low before continuation of the trend expansion. So all in all, the bulls are in full control. I don't see any major, huge market moving events this week, which could potentially really crush us, right? And in any event, we have a very large area of support on the S&P 500 between 548 and about 543. So that should provide a decent little buffer zone to potentially give the bulls another chance at attacking those all-time highs once again. Now, in terms of last week's top 5 plays, guys, let's take a look. And the first one was obviously a 2 pair of semiconductor plays. We were looking for AMD number 1. Now, what we were looking for on AMD was this candle right here. When we did last Sunday session, we were looking for a little bit of a pullback and then maybe targeting the 162 to 150s. Unfortunately, the trade was just didn't present itself to us, right, guys? Why? Because AMD just didn't look back. It just rallied on the Monday session and never looked back. So unfortunately, we never had an opportunity to go shopping for some short puts down here. So the trade idea was good, looking for the breakout, retest, and run. It's just that it never actually retested. It just ran right away from us. So the idea was good, but there was just no trade to be made there. The other one we were looking for was NVIDIA, and NVIDIA was a bit of the same situation, right? So this was where the video was filmed on that Sunday session, and we were looking for maybe a retest of maybe the 120, 119, and looking to go shopping around the 115, 112. Unfortunately, same thing as AMD. On the Monday Monday session, Nvidia just started moving up and never really looked back. So once again, there was really no trade available down in these lower levels as we were waiting for a pullback and never got it. It just ran away from us. So unfortunately, no plays on AMD and Nvidia last week. The ideas were good in terms of targeting big support levels. However, they just ran away from us as soon as the week started. Now, trade number 2 was Visa, and Visa actually did provide a juicy opportunity for entry. So when we filmed last week's video, this was the last candle of trade that we had, and we were looking for 265 or 262.50s on Visa. Monday and Tuesday session gave us pretty much both of those strikes available. If you would have taken either the 265s or the 262.5s, you can see that although we did proceed lower midway through the week, Visa was actually able to close above both of those strikes at 265.74. So this was a very juicy trade, guys, right? Visa, we were looking for this one in a very large area of support. The 50 EMA on the weekly chart was right there, and I was telling you guys, Visa in a bull trend never really loses the 50 EMA that often, and after 3 months of consolidation could just be a nice area for some confluence, right? Big support range. The 50 EMA could just be a case in point for a little bit of a bounce if we do get down into there. And that's exactly what happened, guys. So suffice to say, Visa was a very, very nice trade last week. Happy for myself because I had it in my own account, and happy for everybody else that was able to take that one as well. So moving on, guys, Toll Brothers was trade number 3, and Toll Brothers was kind of another one that really ran away from us, right? So what were we looking for on Toll Brothers? We were targeting this area of support right down here. The markets were moving down into it aggressively. So we were saying we wanted something around the expected move of 106.04 or better. So 106, 105, 104. Think of those strikes. And unfortunately for us, guys, we filmed this video on the Friday expecting maybe a little bit of continuation into the Monday session, but it didn't give it to us, right? Here is Monday and Tuesday, did not break Friday's low and then just ran higher. So there wasn't that much premium available right here, even on the 106s, guys. So I did not take this one myself in the account. As I said, once again, the idea was good. We just didn't get any continuation to open up those strikes. So the trade idea was good, but the market just ran away from us once again. So hopefully that makes sense. The next trade, guys, trade number 4 was Square, and Square, same logic applied, right? And we actually did get a trade on this one. I traded it in my own account live on the, and I was recapping that in my daily market recap videos in the portfolio section, right? So what we're looking for on Square, guys, we were looking for on Square really the 63 and 62 levels. The expected move last week was about 63.24, which is why we were looking under that 63 and $62. And happy to say, guys, on the Monday and Tuesday session, these little drops in this lower 64 range did open up the 63s and the 62s. I personally went with the $63 myself, but the 62s were available at that time. And suffice to say, Square ended up very much higher than that. So that trade would have been a 100% profit opportunity once again. So very happy. The one that I took played out beautifully, and the ones that you took probably played out beautifully as well. So congratulations to everybody that took that play. Another win in the books. Now, speaking about wins, with the 5th trade we were looking at was a combo trade, right? I was giving you guys either one or the other, 2 completely different companies in 2 completely different sectors. Number 1 of those was Win. Win, we were looking for a reaction in this prior support zone, right? Big area of support, this level right here for Win, talking about pretty much 90 all the way down to about $80. We were right in the midpoint of that level right there, which is why I was saying the $85 level was looking extremely juicy considering it was the bottom of last November. So what exactly happened on Win, guys? Well, on the Monday and Tuesday session, it definitely opened up some premium. We were looking for anything below 85. I was saying 84 and 83. Well, happy to say, guys, that on the Monday and Tuesday session, those strikes did open. The 84s and the 83s were open for some decent premium. And happy to say, if you'd have taken either one of those, guys, the 84s or even the 83s, you would have ended up once again with 100% profit. The stock ended clearly above both of those levels. So another good trade by us. Congratulations to anybody who took it. And the other part of the 2 trade series was Fortinet. Fortinet's been one that we've been trading, guys, in this lower level right here, $58, $57 for a few weeks in a row at this point, and a very, very solid company in those levels. And also the fundamentals of the business are very, very strong. Now, Fortinet did give us an opportunity, which I also did take myself last week. Take a look, guys. This is your Monday candle. We were looking for the expected move last week was about 58.60. So we were looking pretty much for either $59 strike if you're a bit more aggressive, or 58. Well, happy to say, guys, that on the Monday and Tuesday session, when we had these dips into this lower area right here, 59.50, both of those strikes opened up. I went with the 59s because I was a little bit more aggressive with it, but the 58s were opened as well. So hopefully you guys were able to get one of those 2 strikes. And as a whole, guys, we ended up over both of those strikes. So once again, 100% win on Fortinet. It's now been a few weeks in a row that we've been doing this pretty much ever since the month of June, obviously, honestly, rather. This trade comes up every now and then, and I take it every single time just because it's such an easy trade on such a beautiful company that I would not mind being assigned, guys, because the drawdown, in my opinion, is not that bad, maybe only down all the way to about $54, $53. So not that big of a drawdown in my humble opinion, if ever we do get assigned. So those are pretty much all the trades for last week. Hopefully that was insightful for all you guys, and hopefully everybody was able to make some decent profit off of those. Now, moving on to this week's top 5 options trades, let's take a look at some of the ones that'll be recurring, right? So once again, guys, I have the AMD and NVIDIA pair. AMD will be looking for the following, guys. If for whatever reason we get rejected right here at this 185 level of resistance and we cannot break and the bulls need to take a little bit of a breather, I'm going to be targeting this area right here, guys. 174 down to about 169. Juicy prior resistance should be newfound support for the bulls, and all the moving averages are pretty much curling up in that location as well. Now, the expected move for AMD is 173.19 for the week. So let's go see if we can find any premium below the expected move of 173 for next week. Let's have a look, shall we? So pulling up AMD on the options chain, let's have a look right here for 173 and better. And as you can see, guys, 172.50 is actually paying above our 0.5% rule. 0.5% of this would be roughly 85 cents. So any contract that shows 85 cents or better can be a candidate for this week's trade. Now, keep an eye, guys. If AMD does pull back on the Monday or Tuesday session, let's say we pull back 179, 178, 177, that may be even able to open up lower strikes, such as maybe 167.5 or 165. So in terms of AMD this week, guys, I really want to be a little bit conservative here, considering the fact that we do have a few earnings here on semiconductors, big ones too, industry leaders, right? ASML and TSMC. Now, we cannot ignore those. So for those reasons alone, I'm going to be playing this a little bit more conservative. I will be looking for strikes 170, 167.5, and 165 as low as I can go while still getting my 0.5% in premium. And the logic is as follows, guys. If AMD for some which reason has a very bad day on Monday morning, let's say they drop like 4 or 5% right out of the gate. We've seen it before, and they come down into our expected move in one day. Are we still going to write very close to this level right here? No, we have to go lower and lower and lower, as low as we can go while still getting our 0.5% rule. So we have to be dynamic with this right there. So the favored strikes for me will be 170 all the way down to about 165, as low as I can possibly go. Moving on, guys, trade number 2 in the semiconductors industry is going to be NVIDIA, and NVIDIA pretty much the same trade we've been trying to take now for the past 2, 3, 4 weeks running, right? So what we're going to be looking for on NVIDIA is this location right down here, our juicy area of previous support for the stock. Now, in terms of the expected move, guys, the expected move for the week is 122.95. Let's just call it $123. So let's go see if we can find any premium on NVIDIA closer to the 119 level, right, which is going to be below our expected move, should give us a nice, decent margin of error. So let's pull up NVIDIA's options chain right here. Do I have it ready? Yes, I do. So moving on to NVIDIA, can we find something at 119? Well, as you can see, guys, the 0.5% rule really starts at 120. Half of 120 is 60, so we need to see 60 cents, and you can see 60 cents is right here at the 120. Now, this is below the expected move. It's actually $3 below, but I want to be getting a little bit deeper into the support range right here. So one thing I'll be looking out for on NVIDIA, guys, is if NVIDIA drops on the Monday session, 126, 125, something like that, right? Then we may even be able to get the 118s, 117s. So I want to be going as low as possible on this options chain as long as I can find my 0.5% rule. Once again, that should be roughly around 55 to 60 cents, as low as I can possibly get, as close as possible to this 50 daily moving average on the daily time frame, right? Which is going to be 115. So 118 down to 115 is going to be the range I want on NVIDIA, as low as I can possibly get, while still getting 55, 60 cents in premium. We want to be careful with this one, as I said, because of the company earnings on semiconductors that we have throughout this week. Now, trade number 2 is going to be Amazon. So Amazon is doing a nice little pattern, guys, that we've been talking about on the channel, right? This is the infamous breakout retest pattern. So on the weekly, break out of the all-time highs, maybe looking to retest the all-time highs, and usually then we do get a little bit of a bounce as a first touch, right? So what we're going to be looking for is exactly this location right here. Prior resistance should be newfound support, and the 50 EMA right there as well, right? So the expected move for the week, coincidentally, is exactly around that range. 189.52 is the expected move. So let's go see on Amazon if we can find some premium below 190. Now, take a look at Amazon here, guys. Amazon is not too volatile of a stock, so you can only really get your 0.5% rule at 190, right? Half of 190 is roughly 95. So we'll need to see about 95 cents on the bid right here. As you can see, there is a dollar available at 190, but that is literally just slightly above our expected move. So the one thing I'm going to be looking for on Amazon is on the Monday or Tuesday session, if we can get some follow through to the downside. Think maybe 193, 192s. If we do come down into that region, most likely it will free up the 187.50s. So my desired strike for the week will be 187.5, but obviously you guys know the rules, right? If we gap down severely tomorrow morning, let's say we drop 2% out of the gate on Monday morning, already into 189. At that point, guys, the 187.50s may be a little bit too close. Take a look at the 185s to see if you can find decent premium down there. So these will be one of my two desired strikes on Amazon for the upcoming week. Keep in mind, guys, we need to see at least 90, 95 cents on these for it to be worth it. So we need Amazon to drop a little bit. Now, if you're more of an aggressive bull and you want to play the 190s directly, perfectly fine. Just understand, guys, the risks. We need to have, right, if we do drop down heavily on the Monday session, right, 193, 192, if you write 190s, it's going to be very, very close to the current stock price. The premium is going to be very juicy, but just understand the heightened risk of assignment, please. Now, moving on, stock number 3, guys, is going to be once again Visa. Visa for the same reasons as I've been talking about now for 3 weeks in a row, right? Gorgeous monthly uptrend right now, pulling back into the 12 EMA on the monthly. And look how well Visa usually holds these monthly 12 EMAs in the context of an overall bull market. It doesn't lose it too often. This was COVID. So anytime we dip below, it's usually recaptured fairly well. And now it's been pretty much 4.5 months of just consolidation for Visa. I really do believe that this one is going to get some legs into the second half of the year. It's the exact same thing that MasterCard is doing as well, right? Gorgeous monthly uptrend right now, looking for monthly higher lows for the continuation of the monthly uptrend. That is the reason that I'm playing Visa. I know they've been having a few regulatory headlines recently, but in my opinion, it is not going to affect their business at all. So just a little bit of short-term downside for the stock, but long-term still one of my favorite stocks in the entire market. That being said, the expected move for Visa, we want to get it as low as possible, guys. In the 260s. Think 262.5, 260, all the way down there, right? The expected move on Visa for the week is 261.36. So let's go shopping on Visa to see if we can find anything below that region right there. So moving on, and keep in mind, guys, the only thing that may affect Visa and MasterCard slightly, they don't really respond to American Express's earnings usually, but let's say American Express has a disaster on Friday, like 6, 7, 8% to the downside, which would be, you know, out of character for American Express, then Visa and MasterCard may move. But if Amex only moves about 3, 4%, these stocks really shouldn't be affected at all. That being said, let's take a look at Visa's options chain, shall we? So take a look here at the 262.5s. Yes, we do have some premium, but not enough. We need to see at least $1.30 here on the bid for it to be worth it for us. So what we're expecting to happen on Visa on the Monday session, if we get a little bit of a dip Monday and Tuesday, guys, keep this one on the watch list. If we get a dip Monday or Tuesday down into the 264s, high 263s, that will definitely free up the 262.50s, maybe even the 260s, depending on the size of the move down. So those are one of the two strikes that I want to be looking for here, guys. 262.50 if we have a light little decline on Monday or Tuesday. If ever we open up with a big drop into our expected move into 262, 261 already, well, then I may be looking for the 260s or 257.5s. So it's going to be one of these three strikes, depending on the size of the move on the Monday or Tuesday session. Hopefully that makes sense for Visa. Now, the next trade we're going to be looking at, guys, is one that's been once again recurring on the channel for a number of weeks now in a row, and that is once again going to be Fortinet, right? Such a gorgeous area of support down here, and if ever we break below that one, just know that there's even a larger support area waiting for the bulls down there with the 200 weekly EMA around 53, so drawdown impact, not that big in my opinion, and the fundamentals of the company are quite good. So that being said, the expected move for Fortinet, guys, is 57.68. Let us go have a look if we can find any premium below the expected move. So in this case, pretty much, $58 or better. Let's have a look. So in terms of Fortinet, guys, as you can see on the $58 strike, there is some decent premium right here. The 0.5% rule would be 29 cents, right? Half of 58 is 29. So we'd be looking for at least 29 cents. As you can see, we have it on two strikes. 58 and the 57.50s. So once again, depending on the size of the move, if we drop on the Monday or Tuesday session down here into maybe the low 59s, high 58s, that's when I'm going to be looking for one of these three strikes, right? 57.50, 57, or even 56, as low as we can possibly go while still getting our roughly 0.5% rule. So that's going to be the region that I'm targeting on Fortinet, pretty much 57.50 and better on those strikes. Obviously, if the market just runs away on Monday, I am not going to chase this one at all. So hopefully that makes sense on Fortinet. And the last trade we're going to be looking at, guys, is Chipotle. Chipotle on a very nice post-split dip right now, down about 17%, right? And where are we coming into, guys? Yes, we're already in a decent level of support right now, but there is another one below us, right? The bulls have a lot of support that they're coming into right now. This lower area is pretty much $55, right? So in terms of Chipotle, I'm really liking this move right here. Yes, we have lost the weekly uptrend into a little bit of a weekly consolidation, guys, but the daily timeframes are almost oversold. Your lower timeframes, the 4 hours, are oversold, and we're just looking for a little bit of a monthly pullback here. As you can see, maybe the extent of that is the monthly 12 EMA. Usually Chipotle does not lose this, especially in the events of an overall bull market. So looking pretty good. Even if we do pull back here, $54, $53 may just be where the pain stops, but I want to play it before that, right? So because I like the company so much and the fundamentals are so solid, and it is on a very nice dip within an overall category of support. So that being said, the expected move on Chipotle this week is 55.92. So we want to be looking at premium below that. And let's take a look at Chipotle's options chain right here. And we're going to go through those together, right? So at a first glance, you will notice something weird. Look at all these very weird strikes right here, right? That is just because Chipotle had a big split. So eventually these strikes will not exist anymore. These cent increment strikes, they will not exist. That's just because Chipotle had a split. As a matter of fact, if you take a look at the options chain for August, you will see that everything is pretty much back to normal as early as next month. But for the month of July, at least we get a bunch of additional strikes, right? So taking a look, guys, below 55.92, I'm liking these following ones right here, right? 55.8 is providing us the 0.5% rule. You can see the midpoint between the bid and ask is about 30 cents, which is roughly above our 0.5% rule. So I'll be looking for one of these strikes in the $55 range, 55.80 all the way down to roughly 55, right? So think this location right here, 55.80 down to about this $55 level. This little pocket right here is going to be my desired area. Now, obviously, guys, if Chipotle drops 3% on a Monday morning and we already come down into the low 56, high 55s, well, then we want to be going even lower. Think strikes in the 54s, maybe even high 53s. Once again, as low as we can possibly get while still getting 0.5% for every single put that we choose to write. So hopefully that makes sense on Chipotle. Now, that being said, guys, that's pretty much all the top 5 options plays for the week, but I do have a few more bonus plays that I always keep on the back burner. Google, looking for Google, same trade as Amazon. Breakout and retest of the all-time highs. If Google continues its slight decline here intra-week, and we do end up close to the 180 level, I'm going to be looking to play maybe the 180, 179 puts on Google. Now, another trade that I may be looking out for is Airbnb, right? So Airbnb looking very good. Very solid area of support, guys. Take a look how solid this area has been in recent history, right? Huge support after the IPO. Then after, big resistance for all of your bulls right here to get through. And now that we're above it, this area should be acting as support once again. So I really like this location right here, especially after Airbnb's drop on the Thursday session. I will be looking to maybe write options, guys, 144 down to maybe 142, as low as I can possibly get, guys, while still getting 0.5%. That is definitely one that's on the table for me. Now, another one that I'm going to be looking out for, guys, is McDonald's, but McDonald's is not very volatile. You really need to be on top of the stock price. In terms of McDonald's, guys, I gave it in the early part of the video. I like 250 or better. So 250, 247.50 down there. If I can get a nice 2% decline Monday and Tuesday on McDonald's, I'll probably be going shopping for some McDonald's in the lower locations right there. Tremendous area of support, and we're really reacting nicely from the 200 weekly moving average. McDonald's usually doesn't lose the 200 weekly moving average that much. Last time they did, it was in 2015, and so far, since 2005, they never really have, except for COVID, which was an outlier, right? So keep an eye on McDonald's in these lower locations right here. I really like the company at that level right there. Those are just a few bonus trades that I'm considering for the upcoming week, right? Now, moving into the earnings plays, guys. So how can we possibly play earnings, right? You obviously know that you've seen me play earnings on the channel a lot in the past. So how do I play earnings while still staying safe? We know that earnings are extremely risky, and by all means, if you don't want to assume the risk and you don't like volatility, do not do this. None of this is financial advice anyways. I'm just going to show you the strategy that I personally use to play earnings for companies that I choose to play it on. I'm going to play every single one of these earnings No, only the most solid companies of the whole group right there, right? So let's say I wanted to play earnings, guys. Let's take, for example, Bank of America on Tuesday, one that I most likely will play. Whenever we're looking for earnings, guys, these rules will apply to every single company, regardless of what sector they're in whatsoever. So let's take Bank of America. Let's say we wanted to play Bank of America. Now, the first thing that I do, number one, front and center, is look at the expected move in terms of the earnings week, right? So as you can see, the expected move on Bank of America is going to be wider than usual because it's an earnings week. So here it is about 3.6% up or down. In terms of the dollar amount, you can see the dollar difference right there on the screen, right? 41.59 down to 40.09. That's about $1.50. Now, this expected move, 3.6%, is what we call one standard deviation. That is the expected move. What I like doing, guys, is going closer for my strikes that I'm looking for. I want as close as possible or above 2 standard deviations. So what we have to do is we multiply this difference by 2. If there's $1.50 between us and the expected move, we go times 2 on that, right? So this should be $3. Now, here's another thing, right? Bank of America reports earnings on the Tuesday morning session. So am I going to use the numbers from tonight, or rather from tonight? No. What we're going to do is we're going to wait to see 10-15 minutes before the close. I always do these 10-15 minutes before the close for earnings that same night or the following morning. Now, what I'm going to be looking out for, Bank of America, is 10-15 minutes before the close tomorrow. I always see where is the stock trading. Then I go to this chart right here, see the expected move for the rest of the week. Because obviously if Bank of America goes down by $1 tomorrow before their earnings, well, this move is going to be adjusted, right? So we have to take the adjusted price. That's why I always do it 10-15 minutes before the earnings, before the end of the day, prior to the day of earnings or prior to the afternoon of earnings, right? So hopefully that makes sense. But let's say for all intents and purposes, for this example, that Bank of America earnings were tomorrow afternoon, right? Or let's say they were tomorrow morning and that the market was that was open right now, right? So these are the final details we get prior to the earnings, in other words. So let's take 2 standard deviations. 1 standard deviation is about $1.50. 2 standard deviations is $3. The very next thing that I do before looking at pricing whatsoever, right? Before looking at any pricing, I go to the chart and see $3. Where is the $3 move, right? $3 would be roughly putting us down into maybe, 38.70, let's call it, right? So right down here, that's about 7.5% to the downside. And then I look, where is this location? Are we at an area of support? Well, good enough for Bank of America. We are at an area of support. So I would be willing to take this trade. If the 2 standard deviation move is at an area where there is no support whatsoever, guys, let's say for all intents and purposes, right, we were down here, right? And the 2 times the expected move brought us into here, but the closest area of support is all the way down here, right? That I would probably not take. So now the fact that we are, the 2 standard deviation move is coming into an area of support, I would take this trade. So the very next thing that you do, the final thing that you do, of course, is take a look at the premiums, and you can see 2 times the expected move, guys, would put us in roughly around the $38.50 mark. And you'll see here, guys, there's almost no premium there whatsoever, right? Almost nothing. So I might take just under 2 standard deviations and go with the 39s, provided that 39 is still in my area of support. And as a matter of fact, it is. It's the very start of the area of support right there, right? So I want to be taking 2 standard deviations away, and we'll probably pretty much get $10. Now you may be saying, but Will, that's not a lot of money, right? Well, the thing is, guys, it may not seem like a lot of money, but once again, we have to view this on an ROI per day. If Bank of America, after their earnings, opens flat or to the upside, this premium in the contract the very following day after earnings are reported will be completely worthless because there's so much volatility because of earnings baked into these prices. If Bank of America just drops slightly less than the expected move, stays flat, or goes higher, this premium, guys, is going to be worth absolutely nothing. So we're in a trade in the last 10-15 minutes of trading, and then we're literally out of the trade by 9:30 the next morning. So the ROI per day is very, very good, right? If we were to take this on a weekly ROI basis or an annualized ROI basis, the returns are actually very, very high. However, that is because we're also taking on a bit more risk. So this is the safest way that I choose to play earnings. Obviously, this is just for short puts. You can use the exact same logic if you want to be writing debit spreads. I don't really write call credit spreads. I don't really do iron condors either. If you don't know what iron condor is, it's very, very simple. You just sell a put credit spread down here. So you're saying the stock can't dip below this range, and then you sell call credit spreads to the above, and you say the stock can't close above that range. So it's basically like if the stock maintains between this range, you collect premium up here and you collect premium down there. That's an iron condor. Very, very simple logic, right? So usually, guys, I don't write condors. The only reason I don't write condors or call credit spreads above a stock at all is just because of the long-term probabilities of earnings. Long-term, every company in the S&P, every quarterly earnings, guys, 70+% of all companies beat their current earnings estimates, right? And their share price moves higher after earnings. Can we find some outliers that move significantly to the downside like we see every single quarter? Absolutely, yes. But the overall probabilities are 70%, guys. 70% of all companies every single earnings season, unless we're in a disaster of a market like back here, right? Usually 70% of them are beating their estimates and providing guidance that is in line or better, which usually translates to a stock price moving up. That is why I never write options on the call credit side of things, because you're going against the probabilities. That's why I always am writing below the market, right? To take the unexpected move. So hopefully that makes sense in terms of the earnings plays. You guys are going to see me play a lot of different strategies on these. I'll be using debit spreads and just straight short puts throughout this earnings season to really try and get the account a little bit juicy, juice up the returns, right? So looking forward to it, guys, but I'll be first and foremost in saying playing earnings has a lot of risk involved. This is by no means a recommendation to trade it. If you do so at your own risk. At least though, the way I play it is relatively more safe than the way that people usually play these things, right? So hopefully that makes sense. So that is pretty much everything that I had for today's video, guys. If you liked the video, consider dropping a like. Would really appreciate it for the growth of the channel. If you're new here, consider subscribing. We do these videos every single Sunday as a kind of pre-week prep for the top 5 options plays of the week. So hopefully to see you back in another edition of a video like this. And lastly, guys, if you have any questions at all on the strategy, on earnings plays, anything you want, guys, leave it down below in the comments and I'll be happy to answer you, usually within the first 24 hours. So take care, guys. I will see you tomorrow after the close. Peace.